What's up, YouTube? In this video, you can see from the title that we're going to be talking about the best entry and how to get it. Basically, last night I was staying up to like 4 a.m. trying to figure this out, because from what you can see from the previous videos that I've posted, I was constantly getting fucked over by the spread every single time. And I never had this issue before because I would always do 10 or 25k accounts. So I was always doing initial small lot sizes. So I never had this problem until now. Because now I'm doing 100k. So obviously when I'm doing them, the lot sizes are way larger than the ones prior that I was doing when I had the 10k or the 25k. But basically I'm going to be showing you guys how to get the best entries and the reason why maybe you also get fucked over by the spread when you do market execution. But yeah, let's get into it. I'm going to put you guys on the market and show you guys how to do it. Let's go. Alright, now we're on the market. Hope you guys are able to see well. As you can see, we're on TradingView. I'm basically going to be showing how my strategy goes and then how the entry works, because as you guys can see, I'm sure you saw from the previous videos, my strategy is pretty simple. Nothing too difficult. But the thing that was messing me up the most and that I wasn't realizing was my entry. Because I would calculate a certain entry and it will drastically put it somewhere else. As for an example. Okay. This is just for example. It's not really my strategy, but whatever. So boom. This little area here. See that I use it as support. It's an area of interest. We see structure. It's pushing down. But it started creating support at this level and then eventually broke under. What we're going to do in this situation is wait for resistance to come back and retest the area, which is right here. So we'll go ahead, put it around here. Stop loss right here above this wick. And then obviously we'll put take profit at this low over here. So boom, whatever. All right, so let's say this is the trade entry, right? See it properly. Let's say this is the trade entry. Basically how it was going for me is obviously this blue line is where I would want to enter. I'll have the stop loss here. I have everything calculated with my take profit as well. But the moment that I would try to enter here, I was doing market execution, right? It'll go up, it'll go up, it'll go up. I'll see that it's in the area zone. So then I would enter the trade with one initial lot size. For example, we're going to use 10. Though it may not be large, I was using a larger one, but just for the example, I was using a 10. It would then enter me down here at this level, just so you guys can see better. It'll enter me, instead of at this level where I'm choosing to enter the trade, it'll put me either around here or all the way in the bottom where the candle hasn't even touched. Mind you, my entry was here, my initial risk is here. So now instead of risking, for example, $1,000, now it's almost 2,500. Of stop loss, and now my take profit is as well terrible. Now instead of a 105, now it's a 101. And the way I was taking it was this. Obviously in this case it would have still been a winner, but for my case this is not how things were working out. It was drastically changing everything on my strategy and my entry and completely fucking me over. Completely. It was not helping out at all. Mind you, I was being careless. I just kept entering every day that I was trading. Sometimes I'll do pending limit, but then other times I'll still do market execution. And I was just being careless, telling myself, bro, it doesn't matter if it enters like that. If my strategy and entry was good, it's going to be a winner. I don't have to worry. With me saying that, I was being careless. Why? Because now I'm adding the bad entries, more money risk, bad risk to reward ratio. As now I'm losing 1 to 5s, 1 to 4s, 1 to 6s. Now I'm only going for 1 to 2, 1 to 1s, 1 to 2s, 1 to 3s, barely. And then I'm losing majority of the money that I have available like this. 1 or 2 trades, half of what I'm able to risk is gone. Why? Because I'm risking 1,000. The trade enters somewhere completely different. So now I'm risking double or almost triple of what I was gonna put up. So then, last night, because yesterday, it was, thankfully, it came up to mind where I was like, bro, I need to figure out why the fuck it's doing this. Because it keeps messing me up. It keeps drastically changing everything. Like, what the fuck am I doing wrong? Why is it doing that? So then, once I figured that out, I was like, okay, this is what I'm going to do. I'm going to just use this account as a dummy account and just enter, exit with different lot sizes and figure out which one's the most accurate and what puts me exactly where I want to enter every single time. And then I noticed it's the lot size. When it tends to be a bigger lot size, it tends to be more inaccurate than when you're doing a smaller lot size. So for example, the 10 lot size is going to be super inaccurate due to the size of the lot size in general. Doesn't matter Doesn't matter where it's at, what currency you're in. If you're using a large lot size, it's gonna be inaccurate. And then when you use a smaller lot size, no matter how many lot size, how many trades you put, if they're small, all of them are gonna be accurate, either to the T or very close to your entry. Unlike a large lot size where your entry is gonna be here and it's gonna put you all the way down here. But with smaller, it's either gonna be right there or slightly below, which to me is way better than this down here. Way better than this down here. Better to have it minimal, because obviously you're never gonna get exactly what you want, but something close to it, as close as it can be, is best. So for example, let's say again for this trade, it's coming up, right? Boom, boom, boom. A 10 lot size entering here is gonna put me drastically below my initial entry. But if I do a 2.5 or a 2.0, it's gonna put me either at the line or it's gonna put me a little lower. But if we look at the risk, look at the stop loss and take profit, right? Let me put it back to where it was. Boom, to where it's a 5.0. Okay, it's gonna be a 1-to-5 risk to reward ratio. Or let's say the slightest chance it goes a little lower, a 3.5. End of the day, that's way better than it coming all the way down here and being a 1-to-1. You don't want to go through all this stress. Plus, before I even continue, when you enter, remind yourself that the price is up here, but your entry is down here. So off rip, you're close to stop loss. You're already negative 1,000 plus because price is up here and your entry's all the way down here. And I don't know how I wasn't losing my shit when I would enter. Like, obviously I'll get upset in the moment, but then I'll just calm myself down, which I guess is good because I wasn't, even with something as drastic as that, it wasn't irritating me to the point where I'm like freaking the fuck out, which is obviously going to be good now for next week when I finally know how to properly enter. But for these cases, for these past couple of days, I'm low-key surprised I wasn't tripping out, you know. But yeah, but I learned what the best entry is a pending limit. A pending limit is your best friend for sniper entries. Why is that? Let's say we have the pending limit at this blue line right here, right? That pending limit is either gonna be exactly at that line to the T. It's gonna be at this line, or if it's moving with major volatility, it's gonna open a little higher, which in this case for selling is way better than going lower. And yes, I did my research afterwards, and it is true. A pending limit is either gonna be exactly here or go a little higher for a better entry. It does your exact price or better. It doesn't do worse. Obviously, there's times where if it moves quick like that, it might, you know, go a little lower, but it's gonna be very minimal, very, very minimal. But 80 to 90%, that's just gonna be either exactly where you want to enter or even better. So you're either getting more risk to reward, less stop loss risk, and a better entry. Or you get your exact entry, your exact stop loss, exact take profit. It's a win-win either way. But the major thing is, the pending limit, make sure that the market is moving distant. Don't have it with a market that's, especially if you see candles like this, like if you see a candle like this, entering right here and it closes like almost close to your pending limit, first see how it's reacting and do a market execution. But remind yourself, okay, if I'm gonna do a market execution, I need to split it into 4 or 5 different trades. Don't do one big lot size, because then you're gonna fuck yourself over and get a drastic change in your entry and possibly lose way more money than what you're willing to risk. So let's say it's coming up slow, like this one right here. Let's say it did this and it came up a little bit, now it's consolidating. In that case, do the pending limit, because as well, the pending limit not just does the exact entry, but it takes away your fear of like, oh, should I enter here, should I do that? No, the moment it hits that shit's gonna enter you. You can't do nothing about it. That's the best thing to do with a pending limit, because now your anxiety, your fear, all that second guessing, all that shit's out the window, because now it's just the computer doing that shit. Computer got no feelings. The moment it hits that line, it's gonna fucking put you in, whether you like it or not. That's the best thing to do. But market execution, you're gonna have that in your head, like, oh, what if I enter here? Should I enter here? Should I wait for it to do this? And that's where it kind of, you know, goes against at best entry, right? But as well, it does save you from getting fucked over from a limit. The only con of a limit is that if it hits, it's gonna enter. Though there's some times where volatility is too high, it's a missed entry, it'll hit the line. If the spread's a little bit too spread out and the top line hits it but the bottom one doesn't, it's not gonna put you in. That's happened to me sometimes, but barely. Out of like 1,000 trades, that shit maybe happens like 5 to 10. Nah, it's not that high. So for this video, it's just simply this. It's just simply teaching you guys, like, I thought I had to sneeze. Basically teaching you guys the best way to enter. Obviously, one's not better than the other, but they do help each other for certain situations. So, again, to show you guys out one more time before the ending of this video, because this is all the video is going to be about. Market execution is best used for when the market is very volatile and moving drastically, because that's when you're looking at the candle at that exact moment and you're looking for that rejection. For this case, because it's a sell, you're looking for that rejection. So let's say, so in this case, we probably would have done a market execution. Then you see the red candle, you see it went up, and then you see the moment it comes down and starts showing red, and you're like, okay, it's showing rejection exactly in the area of interest. I'm gonna enter. Market execution, boom, 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 boom. You're in 4 or 5 trades. In this case, you can do a pinning limit, but as well, think about it. If it does a drastic push up, it's gonna enter no matter what. It's gonna enter, hit your stop loss, boom, you're already out. With market execution, you can see, oh, if what is in a drastic move upwards, you don't enter, you don't lose no money, nothing. You just don't take that. You don't take the trade. But if it comes up a little bit and then boom, rejects, comes down back here, then you can take the market execution entry and enter exactly there when it came back for rejection, had the stop loss appear. Obviously, there's gonna be times where it comes back up, you get lost, but at the same time, you got a better entry than a pending limit, because you were able to see the movement before you enter. So the pending limit, doesn't matter what movement it is, it's going to enter you no matter what. Those are the two differences. That's going to be the end of this video. I hope you guys still enjoyed. It's probably short, but it's very, very important. This is the main thing that you need to worry about when you're doing a trade, because it can drastically change your stop loss and take profit, your risk to reward ratio, and the money that you're risking. So you got to keep it in mind every single time when you're in the market. But yeah, I hope you guys enjoy the video. Don't forget to like and subscribe. Leave comments down below with tips or advice for day trading or YouTube in general. Whatever it is, I'll read it, take the advice. Or if it's an idea for a next video, I'll as well try it out. I'll catch you guys tomorrow or in the market. Hope you guys enjoyed the video. Dale.